Welcome back to Telco Talk right here on CNBC Africa. Still with me in studio, Sunil Joshi, CEO of Neotel, Andrew Sneed, Partner and Regional Head of South Africa at Delta Partners, and Terry White, Business and Technology Advisor at CXO Advisor. Now, Andrew, before the break, you highlighted the importance of fostering local partnerships. Sunil, just during the break, you mentioned that you'd like to follow up on that.
One of the things that came out in the survey as well was the lack of talent and skills in emerging markets. And one of the reasons why people look at partnership and extend that theory to it is actually local talent that one does need to get a sense of the pulse of how business is done in the respective geography, and also have locals relate to local people, because that's how business is done. Often we've seen examples of cookie cut models being deployed in different geographies and not being as successful as they were in the home market for various reasons, but talent does play an important role. And if we look at Tata Communications' philosophy and strategy for its emerging markets expansion has always been to start with local talent. Neotel is one example here. Now, in 5 years, we now have a business of well over 1,000 people, and 99.5% of the people are local South Africans. And so that helps us relate to strategies that are important domestically, but also enable us to grow within the geography that is South Africa. And similarly, we've used the same strategy in about 50 other countries that Tata Communications is present in. And our own local presence through the partnership is through Nexus as our BE partner, and Communitel as our SADC region partner, and Tata Communications as the global best practice majority shareholder, and gives us a very unique combination of skills and capabilities that we can then start establishing and therefore growing our business in the geography that we're aiming to.
But Andrew, there's a risk to that as well. You've trained up these individuals, you invested time and money, and then we hear of the brain drain where skilled individuals get poached by other companies, not only in Africa but perhaps abroad.
Yeah, well, obviously there's an inevitability about that when you have a disparity between supply and demand. And that happens more acutely in high growth markets where the concentration of talent is perhaps more limited than where it is in other markets. And if you look at certain African markets today in terms of thriving economies, Nigeria is clearly one of them, Kenya to a large extent, obviously South Africa, Ghana as well. And all of these human performance shortfalls are relevant challenges for organizations. There's no real sort of silver bullet to accommodate these things. It's a combination of putting in place the right compensation and remuneration schemes, as well as offering them the opportunities and development elements to try and keep the talent that you have.
It's also about corporate culture, making your individuals believe in what the company stands for.
Absolutely about corporate culture, and again, that's why you need the local talent to do that. Now, one of the things when you're going into an emerging market is the question of education. Now, it's not just education of your own people, albeit that they are locals. It's also education very often of your market, and sometimes education of the government in terms of these are the kind of things that can be provided by the service that we're offering. And I see it as investing in in emerging markets is investing as much as going in there to make some kind of profit. The profit motive should really only be surfacing after 5 to 10 years. The first 5 to 10 years, it's about investing. So therefore, you're investing in local talent, you're investing in educating your market, and you're also investing in educating the regulatory environment in which you work.
So it's investing for the long term, not a quick buck.
It's always long term.
And Natasha, can I add, there are a couple of other strong succession planning and people development have to become core as you're building for the long term. And that will help you manage some of the risks of attrition of key skills for any business. And that, I think, is one bit that many organizations sometimes miss, but many organizations who get it right are able to keep the momentum of talent going within their business.
And again, making the talent believe in the core function and message of the company.
If I can add again, I think also a friend of mine calls it, he says you have to establish social legitimacy. And you do that by investing in the environment in which you're going into the people, and you have to be legitimate within that market rather than cookie cutter approach. Here we are, this is it, you'll like it, won't you?
Now, Sunil, in part one, we highlighted the fact that both a large proportion of survey respondents believe in the value of South Africa as an expansion and operational destination. We also highlighted the crucial role that communication infrastructure plays. Yes. As a telco provider in South Africa, in an emerging market, what are you bringing to the table?
Well, what many businesses choosing to expand into South Africa look for is, do you have the right product and services that they're used to in the mature markets or their home markets that you can bring almost parity of service levels? Are you innovative? And will you be able to provide reliable services domestically? And that's why we embarked 5 years ago on fiber infrastructure in South Africa. We now have about 6,700 kilometers of fiber that we lay, and we continue to build on that infrastructure along with data centers. But we've connected our infrastructure ubiquitously with the Tata Communications global 365,000 kilometers of submarine cable assets. So our value proposition in South Africa is 300 cities around the world, 200 countries, 6 continents, we can take you there. Now that's a very strong value proposition for businesses choosing to expand into South Africa and the SADC region, or from the region going anywhere into mature other emerging markets, which we believe that we have the value proposition to be able to assist them to expand into geographies of their choice. So our value proposition is twofold. One is certainly cost optimization to do things better and take the rand or dollar a lot further. But second is, as businesses are choosing to expand in mature emerging markets, we can facilitate that entry from being an infrastructure player.
Now, Andrew, Neotel is one of the players in the market, but what does the overall landscape look like? Does South Africa have the infrastructure in place to service these companies looking to expand into the territory?
I think if you look at the market of late and the developments that have been happening, I think there's been a significant amount of progress. I think a lot to Sunil's point with the submarine cables landing of late, those have obviously had and will continue to have a significant impact in terms of broadband prices, and hopefully that will transpire into retail prices and have retail implications. But fundamentally, I think the amount of progress that's been made within the industry in the last, say, 2 to 3 years has been significant. If you look across the different players in terms of the fibre rollout, that Sunil mentioned, both from Neotel and Telkom, you also have the other specialised fibre players, and also on the mobile side, the deployment of 3G networks, and now, according to the press, MTN, Vodacom trialling advanced, say, 4G networks, in addition to probably all the other providers in the market. So I think, in short, what you've seen in the last 2 to 3 years is a significant level of progression in South Africa. I think once you look outside of South Africa across the rest of the continent, the progress is a little bit more varied, a bit more progress in some of the more sophisticated markets, but overall less so than when compared to South Africa.
Andrew mentioned a lot of progress, but there are still a lot of delays when one thinks of local loop unbundling, allocation of spectrum. From an advisory perspective, surely this is still then a deterrent to businesses looking for the services they have become accustomed to in the developed markets.
I think it is. I was talking to a client this morning who was saying, can I service the African market from the European networks because of all the reasons that you just stated there, or is it possible to service from a South African market in that environment? We're recommending a nodal approach. So yes, make South Africa a node, but also keep in mind that it is possible to set up other nodes that can service a region specific to that geography. So South Africa isn't the only option you have. You have to understand that you have to work within the regulatory and the constraints that you've spoken about, but give some thought to other nodes, because as Andrew was saying, is yes, we have the broadband capability coming into the country, but so has most of the countries along the East Coast and along the West Coast. That capability is coming in there. They can act as nodes going out into the rest of the region of Africa.
But if you are a South African node looking to expand, and with South African businesses looking to expand in other emerging markets, they often look to their own local telecoms providers to do that, and you mentioned Neotel services. But surely these investments are also based on winning new business in the other markets. How do you compete with national and international telcos in those markets as well?
Well, the way that we've expanded our network, and when I say we, I'm using Tata Communications and Neotel as one entity, is we take the submarine cable assets And those submarine cable assets, with the new launch of TGN Eurasia that we did in the Gulf Cable Project and IMEW, we do have an around-the-globe ring on primary and secondary capability on our own controlled submarine cable assets that takes us to even, which are very regulated markets like the Middle East, and using local partners to go from those cable landing stations into domestic geographies. So partnerships play a very important role for our expansion strategy. Of course, our roots are in India, but beyond India, our roots have expanded into 50 other countries where we can service our customers and their growth needs. So it doesn't necessarily have to mean that we have to have domestic licenses in each one of those other countries. We do have OSS and BSS relationships that are very tight, that give end-to-end SLAs for our customers. And whether it's within South Africa or South Africa SADC or Africa or Asia or into the more mature markets, we do that today. We serve some South African customers for their Pan-Africa rollout strategy that need, both on submarine cable assets as well as landlocked areas through our satellite capability. And the same gets extended to other geographies as well.
How do you make sure that those partners are stable, though, that you're partnering with the right people if you do not have a long-term and sustainable relationship, as Sunil has just highlighted?
Well, that's always the challenge. Obviously, the utopia is to have a situation where there is an end-to-end patchwork quilt of various service providers that give you that end-to-end service quality. I think the reality is, in many African markets today, that doesn't quite exist. I think the quality of service and service level agreements that multinationals generally look for are still quite difficult for operators and providers to deliver upon. And that's largely because the infrastructure development, particularly once you get outside of South Africa, is quite limited. If you look at terrestrial fibre as an example, obviously that's significantly less well developed in many parts of Africa when you compare it to more developed regions in South Africa itself. So I think the utopia is there. I think progress is happening. Partnerships are important and they are part of the answer. But the level of service, the quality of service and the agreements that go behind that probably aren't to the level that one would see in other markets just yet.
So SLAs, Andrew just mentioned them, critical when a business is doing and operating somewhere else for connectivity. From a business perspective, how tight are those SLAs? How hard, how much work goes into them to making sure that you've partnered and that you're protected if something goes wrong?
My answer is probably unusual in that we're finding in a lot of the African countries, the expected service level is a lot lower than we have been used to providing in this country. And the issue then becomes is, do you provide that level of service into an environment that's not expecting that level of service? So again, it comes back to the partnerships and the understanding of the local economy. I was reading the other day that an SLA for a telco provider in an African country has gone from 94% availability down to 68% availability in terms of the service level. Now still business continues. And in fact, that service level has dropped because of expansion and because of the expansion of the market, and they've now reached capacity. So those service levels have dropped off. So I think we've got to be a bit wary of applying our expectations of service throughout other emerging economies.
Gentlemen, we have 30 seconds left. Quick word, closing thoughts on emerging markets, expansion, investment, and the importance thereof.
There's opportunities for growth both ways, in my view, emerging to emerging, but we're also seeing emerging market businesses going into mature markets too, to establish base and where they see opportunity. We will act as facilitators, but it's good progress being made by businesses as well as geographies in just improving infrastructure.
I think we need to come back to this. It's, to a large degree, it's about partnerships, and it's about getting the right partner, not rushing in, taking over the right partner, getting the right partner and developing with them in the emerging economy that you're looking at.
Fantastic, gentlemen. Thank you very much.
Thank you.
That's all we have for you on this month's edition of Telco Talk. Until next month, from me, Natasha Jacobs, it's goodbye.